Hello everyone. I'm Dr. Simi Anto, Assistant Professor, Kristu Jayanti University, Bangalore. Today we will be discussing about the statement of profit and loss account according to the Ind AS format. This is the format. According to Ind AS, we have revenue from operations first, that is income first, and then expenses coming up next. So the revenue from operations, that is the sales exactly. With the sales, we have to add the other incomes. Whatever incomes are coming, all the incomes we need to add here. Then the third head is the expenses. Here, the cost of materials consumed. So whatever is the cost of goods that is used in production, okay, cost of materials consumed has to be included here. Employee benefits expenses. If there is any employee benefit expenses, that will be included here. For example, salary, wages, bonus, all these expenses will be included under employee benefit expenses. Under cost of materials, we have cost of goods sold, the old same cost of goods sold. Then we have finance cost. Under finance cost, all the interest expenses will be included. All the interest expenses, whether paid, not paid. That is, if there is an outstanding expenses that has to be added, if there is any prepaid expenses that has to be deducted. And then we have depreciation and amortization. Here in depreciation and amortization, depreciation is for tangible assets and amortization is for the intangible assets has to be included here. Then whatever other kind of expenses comes, all those expenses will be recorded under other expenses. It is always wise to open the working notes and find out the final amount, which is for the other expenses or whatever the title it is, and bring that amount and write here. That will be wise. Then the profit before tax, we can find out by deducting the incomes, by deducting the expenses from the incomes, then the tax expenses and the profit after tax. Let's see one problem. Revenue from operations we have, then other incomes we have, expenses are given, cost of materials consumed, that is the amount. Salary we have, salary is an employee benefit that will go under employee benefits. Then we have advertising, that is other expense. Depreciation, we have one head, which is depreciation and amortization. Insurance will go under only the other expenses. Then we have interest on debentures. Interest on debentures, I've told whatever interest it is, it comes under finance cost. Preliminary expenses, according to Ind AS 38, we cannot include preliminary expenses as intangible assets. It has to be written off in the same period when it was incurred. So preliminary expenses will be treated under other expenses. Then we have bad debts. Bad debts also under other expenses. We have discount allowed. If nothing mentioned, it is discount allowed. That also will be recorded under other expenses. Then we have printing and stationery again under other expenses. So we have the answer. Here revenue from operations, then the other incomes. Then we got the total income. From the total income, we have recorded all the other expenses, which are cost of materials consumed directly given in the question, employee benefit expenses, that is the salary which is given in the question that we recorded, finance cost, that is the interest expense that is cost the company. So if there are more than one item, we will have told that we have to open a note, working note, and that working note number will be included here. We don't have any item which is more than one under employee benefit or finance cost. For depreciation and amortization also, we have only one item given in the question. So for that also directly the amount is written under the head depreciation and amortization. If we had more than one asset to be depreciated, we will be opening the working note. Then we have other expenses. For other expenses, we have quite a few items, that is advertising, insurance, preliminary expenses, bad debts, discount allowed, and the printing and stationery. So all these all this together is totaled and we got the answer. That answer is taken here in the statement of profit and loss, and that number, working note number, we have included under the notes. And then we have to deduct the income expenses from the incomes and we get the profit. I repeat, first comes the revenue from operations, that is the sales, which is given in the question. When we had only one income that we included, then we got the total income. From the total income, all other expenses under this particular heads, that is cost of materials consumed, employee benefits, finance cost, depreciation, other expenses. Okay, then what we get is the total expenses, then total incomes minus total expenses. What we get is the income, profit before tax. Now, in case if there is any other items given, like tax or given, then in that case, we have to record that also under the specific head. Thank you.